All right, folks, they're finally here, right? Those lazy, hazy days, the summer doldrums, less volume, tighter trading ranges. But I got to tell you that there are trends and events that promise us fireworks. The rotation trade making its second attempt in as many months as value has perked up, and profit taking in those monster growth names intensifies. How ironic that these names might have pulled back so quickly. They're already attractive. So buy value, or dare I say, buy oversold big tech names. Let me bring in Walser Wealth Management President Rebecca Walser, along with Visions 4 Fund Distributors VP Heather Zumarraga. Ladies, coming into the session, some of the biggest 2020 winners have all of a sudden lost a lot of ground. Tesla's the reversing, but it's down a lot from the highs. Intel, DocuServe, Amazon, Adobe. These are names, some I missed, some I wish I was in. Maybe we get a chance to get back in them. Speaking of which, Netflix reported after the close, they had mixed results, but that subpar guidance really hit the stock. And yet, at least 10 Wall Street firms have hiked their share price targets. So, Rebecca, I'm asking, do we buy these hot names on dips?
I think so. And I think you definitely buy Netflix at 488 when I think the 550 is a really good barometer for them for right now. I mean, Charles, content is king, and Netflix has the content game won. I was looking at their budget last year, $15 billion, supposed to be $17 billion this year, and obviously coronavirus has affected that some. But they're tripling the closest people, which is Amazon Prime and Apple. So there's no doubt that 80% of their budget goes to original programming, original content, and only 20% to reruns and right. Stuff like that. So they are going to win this game long term with the amount of investment they put in every year. So I think that you can buy this one on the dip and make a short-term profit. And I also think you can buy this one on a dip and actually hold it for a long time. And I think you'll be happy for a long time on this one.
Heather, it's not just Netflix either, right? I mean, these names I rattled off and some that we're showing on the screen, gargantuan winners this year that people wish they had bought. Could this be the chance now that they pulled back a little bit?
Well, I think I'd wait a little bit more, Charles. I remain optimistic long term, but I think especially in the case of the NASDAQ and these big technology names that you're talking about, fear is rising in the marketplace. Perhaps we've gone too far, too fast, and all of this money from the government as well as the Fed is going straight into the equities market. And that's great for the short term, but what happens as that stimulus wears off and all of that money went into tech, and if you have a lot of big institutions right now saying that fear is rising, you're seeing them hit the sell button or at least take a pause in the markets for now.
All right, so Heather, then let me ask you about the other side of this. Value having a really good week. I mean, things like the truckers are killing it. Rail stocks are killing it. Is this where investors should be looking?
Like I said, I think you should wait. NASDAQ has pulled back over 10% this week. I think, yes, you have a buying list. You don't want to miss it. Look, we went as quick as we sold off at the end of March. In 2 weeks, the market rallied back just as quick. So you don't want to miss it if we do get more of a pullback in the marketplace here over the next week. As at the end of the month, the supplemental unemployment insurance, that extra $600 a week for many Americans wears off. And PPP, that Paycheck Protection Program, over 8 weeks, really helped save a lot of jobs.
Right.
What's going to happen when they need more money?
It may wear off, but to your point, and that's something we'll talk about throughout the show, the $600 dilemma. Meanwhile, the Fed's got its own quasi-dilemma. Their balance sheet is steady at $7 trillion. It's only up slightly this week, folks, and it's actually lower than the peak on June 10th. So it seems like maybe they're struggling to either hand out money, all this printed up cash, or maybe they've got to find a new way to lend it out. There's talk of nonprofit organizations, universities. So, Rebecca, does this mean that there's these facilities, maybe we have too many of them, or does the Fed have to do even more aggressive action to get this more money into the system?
I mean, to Heather's point, it's so true. All of this government stimulus has gone straight into the market. I mean, it's amazing. It was a 5 week from February 19th to March 23rd, 32%, generalized correction. And now we're S&P 500 through June is just, underwater 8%. Where did we get such a massive correction backwards, swing backward? It was because of the CARES Act. It was because of the government stimulus. And that can't last indefinitely, Charles. We've got to get businesses reopened to actually create the tax revenue that the government can collect and then spend, right? This government stimulus thing, it cannot last indefinitely. So maybe they're trying to figure out what's the better place to actually put their money. But I think that, this is true. We have a overcorrection, which I was all for. I'm not saying that I wanted us to go into the Great Depression, but at some point it cannot continue. We have to actually get the country back open, businesses back open, people going back out.
Well, then that brings me to this morning, this Michigan Consumer Sentiment Report. It came in lower than expectations. I mean, we thought it was going to pull back, but now it could potentially crumble. The head of the university, the economist there, he issued a dire warning. He said another aggressive fiscal response is urgently needed that focuses on financial relief for households as well as state and local governments, and that without any action, another plunge in confidence and a longer recession is likely to occur. So, Heather, I mean, it doesn't. I'm not sure if you want the additional $600 or not, if you want additional stimulus or not. But he's saying if Congress does not act, we're gonna have a worse recession than we had in March, and I don't think we're ready for that.
Yeah, hey, fair enough. And where are all the fiscal conservatives, right? I guess now is not the time to worry about debt and deficits. Some would argue, or most would argue. And on the other hand, you have Senator McConnell saying that if we have stimulus again, it should be targeted towards Americans making less than, for example, $44,000 a year, more middle class, definitely lower income Americans, and not the wealthy. But the Paycheck Protection Program, over half of those loans were to small businesses. But maybe this time you make sure it only goes to small business hands.
All right, but the bottom line is that you think we need something because I think Congress is going to fumble this ball, and if they do, it's not going to be good. Rebecca, Heather, thank you very much as usual. Have a great weekend, ladies. Meanwhile,